Good afternoon, everyone. Thank you so much for being here with me for about an hour. And today I have something really cool planned for you guys. Well, first of all, before we get started, type in one of the chat box. How many of you guys would like to generate income? And I mean real income or supplement your income, type of one in the room. I know my hands are up. Ah, yes, here we go. Absolutely. Absolutely. Hey, Dennis. Lucho, Amy, exactly. Because everybody, needs to start somewhere. And I know how I started trading and was a little bit of, of my background that allowed me to be where I am right now. So I basically, took my retirement account, invested in myself, invested in a skill that would deliver my income, and I dove into day trading. And at the time, I dove into 20 plus years ago into day trading. I saw the potential into day trading. I was already on the institutional side of investing and swing trading and the hedge fund. And I said to myself, you know what? I can start managing my money. And this is how I started building my, let's say, let me call it ecosystem. Okay. So I created my own wealth ecosystem from day trading, because if you have an income or if you supplement your income, you're able to generate swing trades or generate to have an investing account. But if you don't have the money, okay, where are you going to get it? Okay. I mean, how many jobs can you have? So today I will talk to you about this income generating method of trading, which is day trading. And I'm going to talk a little bit about my background and how I got into futures trading, because this was not my first pick. And I didn't really even know if I liked it. So today we're going to talk about the Power Hour Powerhouse, how you can supercharge your trading in just 1 hour a day. Because everybody thinks that day trading, you literally have to be stuck in front of the computer all day long, which is not the case. So for those of you that are new here and do not know me, my name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized into educating individuals how to day trade, swing trade, and invest in the markets. I have been a professional independent trader, focused on stocks and futures and Forex for over 20 years. I come with 10 years plus in investment banking, and I run two very successful services. One that is 10 years old already. It is the Stock Swing Trader, is the oldest service that we offer at Trade Out Loud. Is actually the first service that we came with on the market. And it is a very successful service. It is based on swing trading and obviously swing trading stocks and also some investment ideas. However, we want to separate the investing from the swing trading, and we have planned a new service along with new education that is a really robust education that basically is where my background is at and where is my A game into investing and value investing. And I bring all the knowledge that I have gained to you guys. I'm also a alumni of Columbia University. I studied the markets and investing there, and I could bring whatever I have learned through my experience, because that speaks volumes. And also I can bring my value investing knowledge as well. And also run a day trading room for futures. Basically, we specialize in the power hours since 2017. And this one came out as a surprise, because I wasn't planning on teaching or sharing my trades. But here is how Trade Out Loud came about, in 2010, and more surprises to come into 2017, where this service became incredibly popular and people were very much interested in how to generate income and how to supplement their income and then generate wealth. Because If you do a quick survey, you will find that people, and I've done surveys into my leads, into my clients, and I often ask them, okay, what is number one on your list, to generate wealth or to generate income? And you would be astonished, but more than 95% of the people said that they want to generate more income. So this is what we decided to do. We decided to create this course, and it's extremely popular. I specialize in high velocity trades. What velocity trades are, basically, when you look at a technical chart, you need to have confluence zones into the trigger points, into pullback areas in bull markets or bearish markets. I'm also the designer of an institutional proprietary trading system that is based on price support resistance, which takes into calculation 8 layers of price support resistance, hence the confluence areas that we look at. I've developed throughout time specific trigger times for the New York trading session, and especially for the morning session. We have trigger times designed for the whole entire day, but more specifically for the open, because I just trade basically the first hour. And chart synchronicity and divergency is very important for the transition of price. Whether you're a stock trader or a futures trader, whether you're a day trader, whether you're a swing trader or investor, synchronicity and divergency is very important because it allows you to read price action. It allows you to read what is strong, so a relative strength, a relative weakness. It allows you to basically see who is in charge at that moment in time. It also allows you to identify sector rotations right from the incipient phase. If you guys want to get a hold of us, you can reach us on Facebook, on X, on YouTube, or on LinkedIn. So today we will be talking about the most important times to take high-odds trades that have the power to follow through, because we need follow through in order to make money. I know a lot of traders that just jump in or chase trades, and that's not the way to do it, because sometimes even if you chase the trade, or if you initiate a trade where you didn't really have a particularly great entry, even if you have the potential of another target, so the resistance is, let's say if you're in a trade long and the resistance overhead is quite wide, that would allow you at least 2 to 3 hours into the trade, you will see that at some point in time, the trade is not going, okay? Because you have to make sure that you have the catalyst in order for the price to move. And we're also going to talk about understanding risk, reading a chart and plotting a trade, and advantages of trading futures, and of course, timeframes that deliver the best results, and how to identify those high-odds trades. That's, I think, one of the most important things, because not all trades are created equal. So my goal for you in this presentation is to understand the process and how I look at the market. And it's a very simple way in which I look at the market. It's nothing sophisticated, and it's nothing that is going to be outside of your comfort zone. So in order to have a successful trade, you have to be always on the right side of the trade. So that means on the trend side. It is a lot more difficult to play and trade when the price action is against the trend. So I'm going to go right now into charts, because I want to make sure that I make myself understood of where we are in the market right now. So the first thing that I look at is basically, what trend am I trading in, right? So if I look, for example, on this chart, you will see that I have a high here, a real prominent high, and a real prominent high right here. We have a pullback here, more substantial pullback here, and let's say more substantial pullback here. But you can see like there's a lot of chart symmetry that we've had. So this is a pullback that happened last year in July through August, and this is a pullback that happened February through March. And by the way, I don't know if you guys are tracking, but this was a full moon cycle right here. And typically when you're getting a full moon, and I'm not even going to get into that stuff, but if you're using TradingView has a really interesting indicator. It's called the full moon. And if you put a daily chart, if you put a chart of the Qs or a chart of the stock, you're going to see, I don't know, probably a trending stock, you're going to see that pretty much bottoms are set into full moon areas. I'm not even going to go there, but it was something fun that I watched, and so far so good. We basically had initiated, and I have initiated a trade. Let me just into the cues right when the price action has created the first bottom in here and has created this doji. So I took the trade in the Qs. I didn't take the trade in NASDAQ because I'm mostly day trading the indices. I do take swing trades in futures, and I'm going to share some of these trades that I took. I actually closed the trade in gold for 104 points today. And I didn't want to roll it. We're not going to get into the rolling process and why I decided to do what I did, but I did sell it for 104 points, and I will initiate another trade very soon. And most likely, I think it's going to be on Monday. So basically, this was the turning point into the market. So from this point on, I became bullish on all the scenarios since we have this doji. Once we started trading above 19,700, I was bullish, 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 bullish. We had a first resistance area right here into the 20,100 area, and then continuation higher into the 200 SMA. So this is where we are right now into the technical pattern of things. So you guys see here, everybody gets confused whenever we have this type of scenario. I use some very simple moving averages as indicators. In fact, this is my 200 simple moving average. This declining pink line is my 10 exponential moving average. This declining blue line is my 20 simple moving average. And this line, green line right here, is the 50 simple moving average. Typically, when the price action is trading in between moving averages, it's caught like in a web, like in a spider web, right? So the price is not allowing the price to shift higher or to pull back lower because it's being held. Now, at this moment in time, we do have the highs from last week, right? And these highs from last week are creating minor support for price action. So I just want to show you something very interesting. So we have a bottom. And if we're going to wherever we're going to close today, I don't even care where we close, but we could actually tackle the prior high. I don't think we have the price action have the energy for that, but just in case the algos are waking up, yes, we can have a tackle of the prior highs. And if this is going to happen, so if we take out the highs that we have established in yesterday's session, the price action is going to start moving higher into the next resistance area, which is pretty much going to be into this area that is determined by the prior lows from January and from the beginning of February. Okay, so this is going to be the first target. The second target we're going to establish into another prior high that is from December. And also this is confluence with the 50 SMA. So today's price action was literally on point with a continuation higher because it was trading on the minor support. Now, minor support is the hybrid of Elliott waves that allows you to get in the trades faster without having to wait for the ABCD cycle. So this is the hybrid Elliott waves that we have identified here as support. And the truth be told is that we took 2 trades in the trading room today that were to the long side. So we never waited for the shorts, okay, because there were no shorts, okay, because we were trading into the minor support, and minor support typically holds the price action. So bottom line is that first off, we need to look at the context of the market and understanding in which direction we need to take the trade in. And if you look at higher time frames, and yes, some of you guys are going to say, oh my God, but I thought you said you're a day trader. I am a day trader, but in order to get my edge and in order to get my bias, I need to look at higher time frames. I need to look to see where the big guys are living. One of the biggest downfalls for this environment right now and for today was the fact that we don't really have volume in the market. So I believe that the volume is going to start shifting next month into probably the stock market and into the futures market, because there are a lot of things that are happening right now. First of all, you need to understand that when we are looking, for example, on this daily chart, right, you need to understand in which context we're trading at. So let's not forget that the date that we're in, it's March 27th today, and we have just a couple of days until the end of the quarter. And with the end of the quarter comes balancing at the end of the quarter. The big funds are balancing a lot of their positions. And one of the most important things is window dressing. So if you guys are not familiar with window dressing, you should, because window dressing is real. It happens at the end of the quarter, and basically portfolios are ditching the poor performance stocks or indices, and they are going to rebuy them after the beginning of the month. But that is for tax purposes and for client purposes, because, for example, if you are a client, and if I am, let's say, JP Morgan, and if you come to me and say, hey, what am I doing in Broadcom within the last few months, because it has done nothing but go down. Okay, so you can see here that this stock is still going to get dumped, because if you put it on a quarterly chart, this is the quarter's performance, right? So it's all red. So what they want to do, these portfolio managers, they want to get out of these stocks that have not performed, okay? And they want to jump back in stocks in April. And that's why I think April, a lot of people are talking about April 2nd. I talk about April 2nd as well, because it is when the tariffs are going to kick in. Okay. But the other thing is that is when the algos are going to start kicking in. 87% of the market volume is created by algorithmic trading. So the fact that we are not having volume right now, it is explicable from the fact that we are fast approaching the end of the quarter. Earnings season has really wound down, and we are approaching this window dressing phenomenon. And they're going to start jumping. And by the way, it doesn't necessarily mean just selling into the end of the quarter. They're just selling the really weak stocks, and they're going to start buying not necessarily into the end of the month, but potentially into the beginning of the new month. So sometimes you could see them buying into the end of the month, but more so you can see them buying at the beginning of the new quarter, and especially after a new earnings season comes in. So the reason why I'm telling you all this is because even if you're a futures day trader, you need to know it, because you need to know what moves the market. A knowledgeable trader and an informed trader is always going to take the best decisions. So one of the most important things that I said, you need to be on the right side of the tape and knowing how to trade each and every single day. So I explained to you guys why it is important for us to evaluate, especially the daily charts. And now we can move on, for example, and let's say, and by the way, we're fast approaching the doldrum period. Doldrum period is the lunchtime when institutional traders are taking their breaks and some of the algos are getting unplugged, so to speak. And it's always a great idea to wind down your trading activity. And if you find, for example, setups, for example, like this one, you can see that the price action is trading above the 10 EMA. So that means that the price caught a bid and it's trying to power trend. As long as the price action is going to reside above the exponential moving average, that is what the EMA stands for, the 10 EMA. We could potentially see a breakout. Usually at this time of the day, I like to pay more attention to the 15-minute time frame, because the 5-minute time frame is going to be a little bit more flakier as the 2-minute, as the 1-minute, because lower and lower volume. And by the way, look at the volume decrease that we're getting here. Look at the constant volume that we had in yesterday's trading session. This is yesterday from 9:30 all the way into the close. And this is today's session. Look at the lack of volume. So the lack of volume is a true indication that nobody's really interested in participating in the trading process. However, you could still look at setups, for example, and if you're looking, for a trade, or if you're looking for a next trigger in the market, the 15-minute is going to be your go-to. So for example, here, if the price action is going to get back into the 193 area, okay, so what this is going to mean for the price is that it's going to complete a bull sandwich scenario, which means that you're going to have the bears, the red bar flanked by 2 green bars, right? It's not the case right now, but if the price action is going to start, we still have 10 minutes left of this candle. And if this candle within these 10 minutes is going to start taking out the high here, the 193.75, then we could talk about a continuation higher, at least into the 300 area. So this is how you read the chart, going from the macro going into the micro. So it's always a great idea as we're going into lunchtime, because we are right now very close to the doldrums, and you saw the volume really well decline. It's better off to zoom out, not to zoom in, because a lot of traders are just living on one simple zip code, whether it's the 1 minute, the 2 minute, or the 5 minute, or the 15 minute. And I'm here to tell you that it depends on the timing of the day. So yes, it's fine if you're trading with high volume and high velocity. And if you're trading with volatility in the morning, it's fine if you trade the 1 minute and the 2 minute, but you need to have a really good strategy for that. And if you're a little bit slower type of trader, if you don't have really fast reactions, then you can trade off of the 5 minute. And actually the 5 minute, I find that it's a little bit safer than all the other time frames. And of course, during the power hour, like I said earlier, 2 minute and 5 minute are the best time frames. These are my best friends. You get reliable entries, you get reliable stops, and pretty good targets on it. So bottom line, when it comes to trading, you have to have a really good trading plan. And you have to respect some rules that we're going to talk about today. But basically, you need to win more than you lose. And you win more than you lose if you have the patience to wait for the proper triggers. Like I showed you earlier, I'm not going to jump in a trade now. I'm going to wait for it to trigger. I'm going to wait for a pattern formation. So it's very important for the pattern to complete. You're not going to take it halfway. You need to wait for that pattern to complete. Position sizing is very important, especially in a volatile market. This is where the majority of traders are going to literally break their accounts and blow up their accounts. I have friends that are brokers, and I talk to them probably 2 or 3 times a week because they're very close friends, and we talk about trading, and they tell me the horror stories that are happening into the futures market, into the stock market, because traders are not respecting position sizing, and they consume 50% on a trade of their account size, or in some cases 70% of their account. They literally have that casino mentality where they gamble their account on a position into the market. So don't do that. Their position size, see what the difference between the entry and the stop is, determine the number of points that you have, and definitely see how many contracts you can take the trade with based on your risk tolerance or your risk allocated amount, and just run with that. I think that's one of the most important things. See how many contracts you can fit into that position. And not only that, but if you cannot fit any kind of size, whether full size or micros, that simply don't take the trade. You do not have to take all the trades. And by the way, in trading, less is more. So it doesn't necessarily mean that the more trades you take, the more money you're going to make. It just means that you're going to apply more risk to the trade. So just again, make sure that when you do your trading plan, you allocate, let's say, between 3 and 5 trades every day. So you give yourself an allowance just in case you have a stop loss to get back on track. But the reality is that you need to have a really good, solid game plan for that. And of course, perform the analysis. I just showed you a glimpse into what I do every single day. I start with the macro, zoom in on the micro, and then I do an incision on my executional time frames at the New York trading session open. I do not trade pre-market, not unless I have really dynamic market environment and I have, let's say, data like the CPI or the PPI. These are pretty much the 2 announcements that I'm looking to trade. And not only that, but I'm not really trading them per se unless they have some really good, solid, reliable, possible continuation factors. And of course, execution is very important. Execution is about narrowing down to your position, narrowing down to your analysis on the chart, on your time frame of choice. And execution is all about triggers, right? So is the pattern a buy setup? Is it a sell setup? Is it a breakdown? Is it an inside bar? Is it a doji? is it any kind of strategy that you apply, it needs to fulfill on the technical chart. And if you do not have that potential trigger, don't get in. A lot of traders play support and resistance, which is not really a great idea, because support is support until it doesn't hold, and it's a strategy that is designed literally in trending markets, if you will. It's more of a strategy for longer time frames, but definitely not for shorter time frames when you have the presence of volatility. So you pretty much have to be in sync with the algorithmic system. And then money management. Money management, I talk a little bit about the importance of position sizing, and we're going to tap a little bit more on that later. But money management is very important, because you can determine whether a trader is a pro or just a beginner or somebody that is winging it by their management system, by how they trail into the trade. Okay, a lot of traders, when they begin trading, because they don't know a lot about the trailing process, they see a little bit of green, they take it, they're happy, okay, but they leave a lot of money on the table. If you have a good money management system, you're not going to leave a lot of money on the table. And earlier in my presentation, when I was talking about myself, and I was introducing myself, for those of you guys that are new to Trade Out Loud, I was mentioning the fact that I'm looking for key areas in the market, and not only that, because I look for those confluence areas into the market. And I also mentioned that I've developed trigger times. So how many of you guys in here got into a trade, immediately got in, and after about 2 to 3 minutes, the trade stopped you out? Okay, how many of you guys, how many times that's happened? Because that happened to me like a lot of times. And many, many years ago, like 20 years ago, I started studying the process. Exactly. So I started analyzing the process, and I've noticed that there are times throughout the day when rotation happens, when triggers are more likely to work, and trades create follow through. Okay, so this is very, very important. So what is day trading? If you're looking at day trading, this is basically income trading, because in day trading positions, you get into a trade and you exit the trade within the same day. But what does that really matter? What does that really say about the trade? So for example, I am mostly a 5-minute trader. Not all the time. So for example, today I took 2 trades based on the 2-minute time frame, right? But most of the time, let's say 70% of the time, I trade the 5-minute. That is because I run a trading room, and not only that, but I need to inform my trades. I need to analyze all the trades before they get triggered in. I need to type the trades into the room, and then I need to take the trade myself, right? So I need a little bit of time. When you're trading the 5-minute, you have a lot of time to calculate your entry, to calculate your stop, to see where the target may be, to position size for the trade. Okay, so you have a little bit more time. When you're trading the 1-minute, it's just in, out, in, out, in, out. So you get exhausted. And by the way, I haven't met a millionaire that was saying, hey, I was scalping my whole entire career. No, you get exhausted. You have to have your comfort zone, and your comfort zone would be the 5 minutes. So why am I telling you this? If I have a trade on the 5-minute time frame, I'm mostly in the trade for about 10 to 15 minutes. That's what it means. So your, let's say, stress is only for, even though we trade stress-free 100% of the time, and this is literally the truth, but you're in the trade in that position for probably about 15 minutes. If you're taking a trade on a 1-minute, expect to be in that trade for about 3, maybe 2 minutes, maybe 5 minutes if you're getting massive continuation. Okay, so you get the idea. The time frame correlates to the timing that you're going to be in a trade. So for example, if you take a swing trade onto the daily, expect to be in that trade from a couple of days to a couple of weeks. So what day trading is for me, and what it did for my lifestyle, it offered instant gratification. And you actually get to trade your way to wealth, because if you have that income or supplement that income, you're actually able to allocate some money for the stock market, allocate some money for your swing trading activities, allocate some money to your investing account, and just stay put some money into high yield savings account, for example, and have that emergency fund. So it allows you to create all these great things for yourself and your family, and offers you security. So this is why I dove into this. Now we're going to talk right now about the power of R. So everybody's asking me, especially when they're at the beginning of the career, is trading risky? And I'm going to say this: if you have a calculated risk, it's not. Okay, it's not. Because trading is like drinking a glass of water or crossing the street. Okay, so you cross the street, you don't look, you can get hit by a car, right? But in trading, if you have a calculated risk, it's not risky because it's not like it's not like a casino style, right? You're not winging it into the market. You have a design, you have designed your trading plan, right? And in your trading plan, within your trading, and by the way, I'm not a believer that you should write a novel into your trading plan. And you're looking at a person right now that hasn't started with a trading plan, because I wasn't a true believer in a trading plan. So I got my trading education, and I have to say I got my top-notch trading education. I was blessed to have incredible mentors, to have incredible mentorship, and due to them and my hard work, I am where I am right now. And I have to say that it is very important to have a little piece of paper, like a Post-it, with your main strategy, your risk allocated amount, and pretty much what you're going to be looking at in the trading plan. Let's say you're going to trade in sync with the trend. You're going to look for trades that are doing buy setups or rotations or breakouts, or start with one strategy. And the buy strategy or the sell strategy, the buy setup or the sell setup, those rotations that are happening in the markets at key levels, those are the ones that you need to start with, because 90% of trading is only buy and sell setups. And the rest are, let's say, breakouts or what have you, like really specialty type of trade. So let's dive into risk and see how risky is the market, right? Because if you determine your risk and your risk tolerance, and why did I introduce this risk tolerance term here? Typically, this is a term that is in sync with investing, right? With investors. But there are traders, and we have traders as members in our trading room and also in our swing trading programs that are trading their IRA accounts or retirement accounts or any kind of long-term accounts where they have considerable amount of cash in them. And for example, let's say you have a $2 million account, and let's say your risk per day is 1%, that may be too heavy on you, right? That may be way too heavy on you. And you say, you know what, I'm not going to stomach, risking $10,000 on a trade. Because if I lose, for example, in 5 consecutive trades, I'm going to be down $50,000. That doesn't really sync with me. So you have to determine what your risk tolerance is, okay? And you can use 0.5%, 0.25%, depending on your account size and your ability to absorb that loss. And you need to be comfortable with the amount that you're willing to lose, okay? That is the number one thing. Now, risk is correlated with your account size, right? Traders should not risk more than, and this is in day trading, should not risk more than, and I would say here 1%. 2%, nobody in here in the room should be using 2%. I'm using 1%, been trading for many years. I have a track record that is on our website. I made so much money every single year. It is ridiculous. It is where I am right now. You come into my trading room, you're going to see my performance. I'm going to share it with you. It is outstanding. And even with my outstanding track record, I do not risk 2%. When I'm swing trading stocks, I use 3 and 4%, but not when I'm trading day trading futures, because that is way riskier. Now that we have that set amount, right? So let's say 1%. So let's say you have a $50,000 account, okay, which is realistic, and you're risking 1%. That is $500, right? So now that you have the set amount to risk per trade, you need to figure out how many contracts or shares to take the trade with, right? So that's the next stage on your plan. So for example, we talked about this trade right here, okay? So let's say now we're gonna look for a buy setup, right? So this candle right here is still trading. This is the 15-minute time frame. So this candle is going to close in about, I don't know, it's going to close at 11:45. So if we have a rotation that is going to happen, let me take this thing here, okay, so I can explain it. Okay, so for example, if let's say this candle is going to close, and if we are going to get a green candle that is going to take out the prior high, wow, was way too thick. Okay. All right, let's do this. Okay, so here it is. If we get a green candle that is going to take this high, this is a classic buy setup. Okay, so you have a 3-bar pullback into this top, into this resistance, right? This is resistance that now becomes minor support, right? So you're going to look for a rotation at this point. And within, let's say, the next 15 minutes, if the price action is going to take out this prior high, you're looking at a buy setup. So what that means is that, okay, let's take, all right, here it is. Okay, so we're going to place our stop here, let's say, and the stop is 20.090, and our entry is going to be 136, right? So let's clear the charts out just a little bit here. Okay. All right. So we're going to take this tool and we're going to trace it a little bit so we can see here how much we're risking and what the R is going to be for the trade. Okay. Hypothetically, this is the stop. Now, this is an ongoing candle. This is just an example because this candle has not closed yet, and this is not a valid trigger. But let's say we're willing to take the price into this 200 SMA. So you're going to see here that this is going to be more than a 3-hour trade. So we're going to be risking, let's say, $500, and we're going to make 3 times that. So that is $1,500 on this trade. Does that make sense, everybody? Because let's say the risk here is going to be 47 points, right? The difference between the entry and the stop is 47 points, okay? So we're going to be risking $500 in here, and we're going to be making $1,500, okay? So that's the way, that's how it works, okay? And now a very important element is deciding how many trades you will be taking per day if you're a day trader or even a swing trader. So how many trades are we going to take per day? A lot of traders are going to say, hey, I'm only aiming for 1 trade. And that's not really realistic because, for example, if you have 1 trade that you take, for example, I took the first trade today and I lost 1 R, right? So let's say if my risk was $500, I lost $500, right? I cannot lose more than that. So if I take a second trade, I'm allowing myself to get back into the game and potentially recover what I have lost. So I'm getting back in, and I had a second trade in which I made almost 1 R, right? So it basically for me today is a break-even day because so it allows you basically if you allow yourself between 3 and 5 trades like me, you're allowing yourself to recover from a loss. But do you think that I'm going to take the rest of the 3 trades today? The answer is no. Because if the environment is right, yes, I will take another trade. But if the environment is not right, and if it doesn't show clear entry signals for either longs or shorts, I am just going to stop trading. So you don't have to take all the trades. Now, let me share with you an example here. This is a short example. And this is the sell setup that I was telling you guys about. These are the strategies that you're going to use more than 90% of the time. And this is the stop. The top of the pivot is the stop. This is the entry right here. We also have a little bear sandwich. You can see here that the bears are squeezing the bulls out of the equation, and they're dragging the price lower. This becomes the first target because it's a prior low. So it's at support, it's breaking through the support, it's getting into the second area of support. This line was traced ahead of time because it was another support zone. So we wanted to make sure that we get it in, we know where the area is. We don't trade blindly. And in this case, this is the risk right here. And this is all the reward that you guys see here is more than a 3R, it's probably like a 6R reward. So that if you're trading with $500 per trade times 6, you get the picture. That's how much money we made. This is actually the second trade that I took. And you can see here that at 9:45, we had the reversal and the price action got stuck right into resistance and got stuck also in the 200 simple moving average here. And you can see a lot of topping tails and a lot of Christmas light effect here, right? This is the linear Christmas light effect base. When we got the breakout, right, my entry was 105. When we got the breakout, we had targets all the way to 200. So we had the first target into the 120. We had a second target into the 130. We had a third target into the 150. And we had the fourth target or what have you into the 200. And we trailed out of this trade successfully because I had to be here in the room with you. And that's why I took my profit sooner. But before that, the price action had rallied and it was basing right on 50 SMA right here. And it did another linear Christmas light effect. And we took the breakout here again. And this time around was at 95 when we had a very tight entry, a very tight stop right below these lows right here. And you can see here that this candle actually took us out. So this was a stop loss. So this is 1R. So once again, you risk $500. Here, I could not lose more than $500. Even if the distance between this high and this high is smaller than the distance between this high and this high, right? Because here, if you trade per contract, you're going to see that you're going to risk about 85 points. And if you are risking here, you're risking about 30 points. Okay, so this is the reason why position sizing is key to trading. Now, you want to start trading, but you don't know where to start. I could be your personal GPS. You can trade from anywhere in the world, whether you're trading in your house, whether you're trading on the go. Oh, this is my boat. And I'm always on with my laptop and I'm looking at charts. You could also, and like I said, I specialize in the power hour. So that the performance portfolio that we have on our website and that we provide to our traders is designed and the results, even in the swing trades, are taken within that power hour. That's it. Within 9:30 to 10:30, that is when I take my trades. And I'm done. At 11 o'clock, around 11 o'clock, I'm done. There are some instances where we trade the CPI data or the PPI data, but the market needs to be in a certain context. I do not have enough time to explain the context, but I do have time to share this slide with you that I shared with my members in the room. Good morning, pre-market watchers into CPI. Why I'm bullish. This level, S&P over this level, NASDAQ over this level, RTY over this level. These are the key zones. This one, I was talking about these key zones right here. And shortly after, okay, and I usually post this a couple of minutes before the news strikes, okay? And the news strikes, and we're like, this is what I call instant gratification. Look at this massive move. And I said, high risk, but high reward. I think I'm done for the day. Thanks for stopping by in the TOL trading room. YM 140. And then we have talked about these targets right here. So you can see here, these are the targets on deck, on deck, on deck. We have been discussing these target levels since last week because the market probably has been in another consolidation. All right, here's another 5-minute work day. You can see the context right here. So I'm sharing charts, I'm sharing everything. Strong momentum, you can see here up 1.5 bars. And actually more than that, look at these moves that have happened right here. 2 stop levels to watch, 1 minute to go, target achieved. So targets are instantly, but again, you have to have a little bit more confidence into the market and you have to have market knowledge in order to do that. This is another example. Good morning, team. These are some CPI numbers in which we were done literally before the market opened. Obviously, we were looking at setups for more conservative traders that were in the room and did not want to participate in the CPI numbers, which is more aggressive. But again, you have a defined risk, so there's no problem there. Again, this is for members only. This is I think this was from an open house that we hosted. This is 52 points in 1 minute. That's $1,060 per contract. This is instant gratification. So trade for a living means no boss, no commute, no customers, no clients, no earnings. It's just you and your trading computer. And I could teach you how to do all that. Turn your computer into your personal ATM. And again, this is the perfect time to learn to trade your way to financial freedom. Whereas we're starting right now, the spring quarter, the second quarter of the year, and we're going to enter into a very dynamic earning season. The market is a permanent transfer of wealth to from the novice trader to the educated trader. Everybody knows that. And by the way, the market is still going to be volatile through 2025. We just had FOMC. They didn't cut any rates. You saw the market barely had any kind of reaction. Basically, the trade wars games is still going to be on. You guys, we're literally on our toes. What can I say? April 2nd is going to be key. Inflation is still super high. Massive layouts continue. You probably are aware of them. So all you need to do is basically have the proper education in order to do that. Because if you have the education, you have the patience, the confidence, and the focus. You have to have a burning desire. Again, education is key because that provides you the foundation, and you run from there. It's only going to get better. Discipline, patience, focus, conviction, perseverance. In trading, basically, I trade the futures indices. These are my employees. That's it. And the rest of the panel mostly for swing trading. So just want to share a trade with you guys very quickly that we still have ongoing. And this is a copper trade. Okay, let's see. I don't know where I'm typing. Okay, so this trade is still ongoing, and we have okay, let's see if this is one. No, it's okay, here it is. Okay, so this is copper futures, and again, this was a swing trade. I'm going to share with you my stats. You can see copper here, copper swing $4.70. And you can see here that we have already achieved. This is the entry. This is the stop. Nothing is measurable if you do not have a stop. And this is target 1, target 2, target 3, target 4 that have already been achieved. And this is today's trail at $5. Do you guys know how much per contract here? If you took it over one contract, $22,000 per contract, this trade. We initiated this trade February 20th, and a month later, we're $22,000 rich. That's the power. Okay, that's the power of futures. Trading is a rule-based system. Fast trades, waiting for the proper setup, find a precise execution, money management skills, and mindset. So what is the power hour? Everybody's asking, what is the power hour? So what if I told you that in trading, there are 2 power hours? Okay, well, the power hour that I trade is obviously in the morning. It's from 9:30 when the market opens. I don't trade pre-market unless it's a CPI data or a PPI data. I have zero interest. Basically, it's a surge in trading activity and volatility and you're getting a reaction off of the data that comes pre-market, and that creates the power hour momentum. So it's basically from 9:30 to 10:30, and there's the second power hour that I don't trade. That's from 3 p.m. to 4 p.m. Best trading times. Okay, so 9:30 to 11:30 tops. And my favorite trading time is from 9:35 to 10:35, and I'm done. And that is because this is when we have the most volume, volatility, and news momentum. That means reaction. Worst time to trade before any economic news release. If you're trading before, ooh, that's painful. A couple of hours before the FOMC option expiration days, last day of the month. So coming Monday, do you think I'm going to love trading on Monday? Depends. I don't think so. All right. So we're talking about a morning hybrid type of Elliott wave timing, because I want to give you a little bit of flavor of what's going on in the market. Typically, if the market shoots up in the first 30 minutes, you're going to get a shallow pullback. If you're getting a choppy market for about 15 minutes, it means that the market is going to calibrate around 9:45. It's going to shoot up. This is exactly what happened today. So we had a pullback into the market. Let's get back in here. So we had this, let's get it on the 5-minute. Everybody was like, oh my gosh, the market is going to go lower. You know, the market opened. Here is the market open. 9:30, boom, back down. When did this reversal happen? Right here, 9:40 to 9:45. At 9:45, you got the trigger for higher. And then you have the consolidation into the highs, and then you have the explosion higher, right? So this is exactly what I mean. You get a chop here, okay? You get a chop here, and then you get the shoot up into 10 o'clock. So it's priceless. If you know how to trade, it's so great. So remember to treat your trading activity as your business. Very important. You can actually incorporate your LLC and you can deduct a lot of the stuff like computers, desks, light bulbs, what have you. Trading should be a rule-based system and should be boring. If you're excited when you're trading, if you are trading with emotions, you're not really properly doing it. Focus on the strategy and not on the P&L. Let the chart do the talking. No egos and no crying in trading. Trading one day at a time. And remember, it is so important because this is not a get-rich scheme. You may have down days, you may have up days. It's a process. Have a well-thought process. Love what you do for the right reasons. Have a winning mindset. Always improve and study, and always reward yourself. Always reward yourself. And again, have the patience, because if you have the patience, and again, patience is correlated with education. Okay. If you hear someone say, I don't have the patience to wait for the trade, I just jump in, it means that that trader is a completely uneducated trader, doesn't know what a trigger is, doesn't know what an entry is, doesn't know, doesn't have a strategy, doesn't have anything. So let's make 2025 your most profitable year ever. I'm inviting you to join the trading room. We trade every single day, Monday through Friday. I open the room at 9 o'clock. I usually come on the mic around 9:15 to 9:20, depending on the market environment, because I watch the pre-market data. It's not that I'm brushing my teeth, and we trade together. And I'm inviting you to join today. The Futures Power Income Trading Room is valued at over $2,999 because we do offer the comprehensive pre-market analysis, macro to micro daily, levels that are insane. We have power player selection. We have exact entries with stop targets and management, and I hold your hand through all the trades. So it's not like I'm telling you, oh, you know what? I kind of like NASDAQ higher. Okay. And you go like, oh my God, I have to find an entry. I got to find a stop. No, clear entries, clear stops. Here's the entry. Here's the stop. And here are the targets. And I'm managing it for you. How many traders do that? Like, show me one trader that manages the trade for you, whether it's a swing trade. They go like, you need to have your own plan. You need to develop your own system. I mean, this is total BS. We are trading, day trading and swing trading futures. We have earnings focus. We have economic focus as well. We have lectures. We have Q&As. If you want to find out stuff, every single trading question that you have, we can answer it for you. And there is no silly question when it comes to things, Dennis. And there is no silly questions when it comes to trading, by the way. We do offer a transparent performance portfolio, real-time access for all our traders. We have a private X feed. This is real-time market commentary that is outside of the market hour. So if there is something happening in the overnight, or there's a trail that you need to trail immediately, and I have my alerts already set, you really have to be in that service to find out. If you don't, but your obligation is to place the alerts where I particularly suggest in the trading room. And all the trades, whether it's a swing trade or whether it's a day trade, is called within this power hour. You're also going to get a platform layout. Successful trading is about having the right strategy. It's not only about having the right strategy, but knowing how to look at an optimized chart, optimized screen or screens, and you're getting a risk sheet for your position sizing. So if you would like to join my trading room, it's $299 a month. I'm going to post the link in here for you, and you can find more details in here. Okay. BJ, why is my simple question not being answered? Because I'm not done. Okay, so when I'm done, I'm going to answer your question. Okay, so this is the performance portfolio. You guys can see it here. This is the 2025 performance portfolio. These are all the trades that we took. This tracker is per contract only. And the February, this is February, and this is March. And you can see here that today we closed the, oh, here we go. We closed the, I don't know where it is. We closed the gold trade for 104 points. I don't know, I can't find it. And I'm really running out of time, and I have to answer BJ because other than that, he's gonna fire me. Okay, so these are the trades that we took today, and this is so far. This is so far the portfolio for this month. So over 8,700 this month, 20,000 last month, and 30,000 the prior month. And this is with only one contract. This is the tracker per one contract. Again, if you position size, this would be so much bigger. This would be probably times 3 or 4, and this would be probably times 3 or 4. And I also wanted to share something with you at the bottom of the screen here. If you scroll, you're going to have the performance because everybody's saying past performance is not indicative of future returns. Okay, here it is. Past performance, I think this is a pretty clear indication of how our tracker goes. You can scroll through all the months in here and all the years. And by the way, here is my personal performance in case somebody is saying like, oh, are you really trading? Okay, here is my personal performance. And you can see here that this is 6,400 tracker per contract per month. And this is my result, 62,000 in January, 31,000 in February, and you could actually 39,000 here, well, 18,000 here, 168,000 in May, June, 119,000. And you could see, the tracker and per contract, and you could see my personal performance portfolio. Okay, BJ is asking, what is your 20 moving average? I said it several times. It is an simple moving average. The only exponential moving average is the 10 exponential moving average. All right, I'm open for questions. I still have 3 minutes. Let me know if you have any questions. All right, David, I think you have the mic.